If you ever have invested or traded with cryptocurrency and lost money, believe me, you are not alone, because unfortunate statistic is that absolute majority of novice traders and investors in cryptocurrencies lose their capital. But here's the thing, if they knew what kind of mistakes they are making and if they knew how to fix them, well, they could become profitable relatively quickly and easily. And in this video, I will show you just that. I will show you the typical mistakes that most crypto traders and investors are making, so you can avoid them. First things first, traders and investors have one very unfortunate tendency. They like to trade or invest with one idea or one trade in mind, and they are hoping to give this idea some, I don't know, unnecessarily large weight, and they believe that's really simple. Do their homework, make some due diligence, make some research, and invest all of your capital in just one trade or one idea, and to hope that this idea will become next big thing and they will become millionaires. That in practice, this doesn't work like that. And in practice, you have to first and foremost look at your risk management, because either this is investing, either this is trading. Risk management is backbone of any financial success, and there is no difference whether you use stocks, you use forex, you use commodities or cryptocurrencies. The approach in this way is identical. So that means you have to diversify between various types of coins which are unrelated to each other, and if you are trading, you have to put your risk down, so you could easily be comfortable to take 5 to 10 losses in a row and still wouldn't be bothered by that much, because, well, inevitably that will happen. You will have some losing streaks or periods where nothing happens, and these are the moments which separate real winners from losers. So risk management is foundation of everything. So if you have to spend some time somewhere, it has to be proper risk management, not research and your forecasting abilities to say which will be next great coin, but no, proper risk management, diversification, and knowing what to do when something bad rather than good happens. This is the way professionals think and professionals act, so you should too. In simple terms, that might be something like that. If you're an investor, just take not one, but something like 10 coins, which you would divide equally. Say you have $10,000, that means you will have 10 coins and you will invest 1,000 in each of these coins. That's simple approach, diversification for crypto investors, but for crypto traders, that would be risk no more than 1% per each trade. In that way, you will have enough firepower if there is some losing streak, because even 5 or 10 trades, which will be losses, wouldn't hurt you that much. So this approach is really simple, but believe me, it could make world of difference. Now let's go to second mistake, and second mistake is inevitably tied up to first mistake, and this is lack of proper understanding of leverage. Because if you are a beginner, please start to trade or invest only with spot cryptocurrencies. Do not use futures and any kind of leverage trades, because yes, it might sound tempting that you could trade not 1 but 10 bitcoins at each trade, but that potential profit could turn into real losses really quickly. You see how large volatility is in crypto markets, and then that 10 or 20% rise at 1 week could become 30% drop in another week. This is entirely expected of cryptocurrencies, because look at history. Bitcoin had several drawdowns in excess of 70%, and that's pretty realistic if we would have similar drawdowns in future. But if you are trading with high leverage and without proper risk management, that means that one trade could entirely ruin you. So start wisely and you use only spot trades, and that comes especially true with smaller pairs, because smaller pairs have way more volatility than something like Bitcoin and Ethereum. So that means that they might rise not to 20 or 30%, but 200 and more percent per even couple of weeks. And then spot trading is something that you should clearly avoid, because remember, you have to think about risk. You don't have to wait for next big thing and hope that you'll have 100-fold rise between 1 or 2 coins that you have assembled and that's all your capital, because that rarely happens. And if you are having this kind of approach, it's the same approach as you would try to win in the lottery. Simply don't do that. Think about long term, think about different market situations, different market conditions, and how you can actually prosper when things go both your favor and against you. And there, spot trading is the key to long, consistent returns. But if you have spot trading approach, which really works, and you have seen that you could make money both in rising and falling markets, only then you might think to use leverage wisely, but only then use it with extremely liquid pairs, with largest and most reputable exchanges. And then might something work, but only when it's tested and proven with spot approach. And that's the way how to do it. If you want to see how this is done correctly, how both spot trading and futures trading works with cryptocurrencies successfully, then you have to see my Telegram channel, because there you will be seeing live trade analysis, trading signals and examples with real-time trades. You will see how professionals trade and you could copy their trades. And remember, this is completely for free. All you have to do is join link below video and join me. But now let's continue this video. One thing, of course, here I also want to address, it's not more a lack of skill, but I would say psychological mistake which causes us a lot of money is called FOMO, or simply fear of missing out. Because if you are young and if you just started to trade crypto, chances are that you might be hooked into crypto because you just saw some huge rise in crypto markets in general. For instance, you saw that, I would say, Bitcoin has risen for 100% last year, and you see, yes, this might happen to your account if you invested earlier. So you're rushing in, you are trying to chase that market, and you are fearing that all the great bull markets have ended and you wouldn't have any opportunities left. But this is very dangerous approach, because chances are, if you are starting to trade or invest by this approach, that bull run has already, if not ended it, but close to its end, and you are already probably slightly late. But good thing is that bull and bear markets happen all the time, and the best ways when to invest are when people are going out of crypto, not when they are going into crypto. So avoid this temptation, avoid to invest in cryptos or in other exotic, I would say, altcoins, which has already made 20 or 30-fold increases in recent months, because, well, most likely that bull run has already ended there. And if you want to see this correctly, you have to see what are the long-term performance of that specific coin, what's its historical bull runs, what's its historical market falls and bear markets, and then you could see some patterns. Maybe some currencies are just rising for a couple of years, then they're falling for 80%, and then they might fall and rise again in next phase. So you have to see and observe what's happening with each coin, and only then you should invest. But avoid that temptation to run after high returns, because you might fear to miss something else, because that's the way you will most certainly lose money, because you will rush in without preparation, without thinking, and without real approach to crypto trading and investing. So question is what to do? Well, if you are a beginner trader, first things first, you need to have strategy and correct mindset. That means you have to precisely know which pairs you should trade and what are the historical performance of these cryptocurrencies. Secondly, you have to have precise entry and exit points where you could actually trade from. Then you have to see what are your risk management, how much markets you will trade, how much you will risk per each trade, and what are average win and average loss to your strategy. Once you have set this in, have you tested it and traded with really small sums, then you might have something. But start to trade or invest only when you have a lot of testing and a lot of analysis, and to see that approach really works in different market conditions with different coins. And then you might have a good chance to succeed. So do not make these mistakes. Be smart. Avoid irrational chasing after quick buck, but make real long-term strategy that works. But if you want to see how this works, watch other my videos and look at my Telegram channel, because there you will see full crypto trading strategies. So thanks for this video and stay tuned.